Excellent. What percentage LTV are we looking at? I know in the hotels, I just got, I think, very good rate, 5-year interest only on the new hotel I'm buying. Well, it's already built, 2014, I think, in Virginia. I'm buying it over there in Norfolk, Virginia.
Okay.
And then we just put an LOI for a Texas hotel, St. Padre, and then another one over there in Ohio, I think, or someplace. My partners we are building. And it's been really exciting to really diverge and go from multifamily, stay there a little bit, but also go into all different other places, So let me ask you a question. In the storage units, what are some pitfalls in operation? What are some pitfalls in operation that you would say, please expand on that. Yeah.
The biggest pitfall in the most risky time is in a new build or a complete renovation in the lease up period, going from zero to stabilized. And think about it. People don't like to leave. People, like I said before, the tenants are really sticky. And so they're probably not going to leave from down the street just because you build a nice new facility. It's just easier to stay where they are. So it's really hard to lease up. And unless it's an undersupplied area, we just invested in 2 north of Boston. We took old warehouses and an old strip center, and our operating partner is renovating those. That'll be a little easier because the average square feet per person in those areas is much lower. And so having a new facility will get, a lot of attraction. But generally, if it's in a normal area, it just takes a while to lease these up, sometimes 3 years. And so that's to get it from 0 to say 90%, which is a stabilized occupancy. That's one risk. The bigger risk, it should only be really 2 years, but the bigger risk is if it's in a popular area and a large national competitor pops up next door. And so we were investing in Bradenton, Florida in, late teens, 2018, I think. And it was a very popular, fast-growing area called Lakewood Ranch. And, 2 national competitors pop up down the street. So it made it very slow for the competitors and for us. The problem was the competitors had a lot more patience. They were REITs and they, institutionals. And, they could undercut us and they could market better than us, and they have a better honestly, they had a better property manager, at least at the time at first. And so it took a couple of years for our new facilities to get on their feet, but they did eventually sell for a very, very nice profit. But that was the riskiest self-storage deal I've seen. And again, it was because of the competition mixed with the fact that, we were going in a lease up phase. And so those are the biggest risks to self-storage, I think.
Excellent. So succinctly you put it together. Let me ask you a question. I'm going to take you to David Green. He's a good friend of mine. He lives right here in the Discovery Bay, and just a great friend with Bo and Mario and myself and Dave. We have had lunches and dinners together, and he's now the head over there at BiggerPockets. Right. What are you seeing some of the investors? This is a little different topic, but my goal in life is to really move more and more people from residential to commercial. It could be any kind of commercial, but I think we can scale up better and easier in going into commercial. What's your opinion on that?
People ask me, what would I tell my 23-year-old self? And of course, I ask myself, would I have listened? Probably not. But if I had to give myself advice, I would have skipped years and years of residential, and I would have skipped everything else I did, frankly, to just get straight into commercial real estate. And I think, the path in is harder. The barriers to entry are higher. I mean, you have, when I was thinking about investing in commercial real estate in the early 2000s, I hadn't heard much about syndications. And I thought, well, what kind of liquidity would I need? What kind of net worth would I need? What kind of, how do I get hold of these brokers who don't have to even take my call? And so the barriers are higher, but syndication has, knock down those barriers for the average accredited investor to get involved.
Yes.
But I absolutely agree with you, Vinney, that, there's got to be a reason that most of the Forbes 400 wealthiest Americans invest in commercial real estate. And one of the reasons is scale. But the second reason is this math that we went over earlier with the U-Haul. The math allows you to increase, to basically drive force appreciation by increasing net operating income. And so I love commercial real estate. And like I said, the last third of my book has 7 paths to get into commercial real estate.
So wonderful. So nicely put. To be truthful, everybody knows now, I'm a product of syndication. That's why I wrote that book, Apartment Syndication Made Easy, became top seller. I would love everybody to get that book for free.
Hi, you are listening to Syndication Made Easy podcast. We will be right back after this short break.
Hi, thank you so much. This is Vinney Chopra, and thank you for subscribing to my podcast and YouTube channel and Facebook pages and all the great things, and LinkedIn. Connect with me. I come live to you every Friday at 9:30 Pacific with Vinney and Bo Show. Please also look at that. And also the podcast, which is my Apartment Syndication Made Easy. The book I wrote a couple of years back became international top seller on Amazon International now. And then we like to bring great guests for you every week or twice a week sometime to give you a lot of great knowledge. So please subscribe. You give us 5-star reviews on the iTunes. The better the guests we can bring, and our ranking will go higher also. Thanks again for following us and really getting the most out of it. Please comment, like, share, because we would love to bring better and better material for you. Love everybody to get that book for free. My second book is Positivity Brings Profitability. My third one is coming out, which is Senior Living Investing Made Easy, because I have a big goal of $2 billion construction management. We are vertically integrated. But I do want to say something. Syndication can change your life. I've done 39 syndications now with funds and individuals. The key thing is power of money, OPM, other people's money, is what has brought me from buying a duplex. We still own the duplex, to 14 units for 180,000 to 800 million portfolio now. And going to be $1 billion very soon. The key thing is syndication. So I hope everybody listening to us from BiggerPockets or otherwise find a way to combine the resources of the nearby people in your family, in your friends, your colleagues. And then it's not hard. I know a lot of people told me, Vinney, don't be a syndicator. You'd be sued. You'll be doing that. If I had listened to them, I wouldn't be where I am today. So please don't listen to those naysayers. Isn't that right, Paul?
That's so true.
Because there are so many naysayers. Because they are not that savvy or they understand what's the game. Commercial is the game. Commercial market is the game. Leverage is the game. Taxation benefits are the game, and there is $32 trillion. I don't know, with the stock market going down, there might be less in retirement funds out here, and I'm buying this. I bought a deal. I want to share that with the audience. What can it do for you? A guy who came with $7 from India. I bought a deal for $34,750,000 in Austin, Texas, selling for $63 million in 1 year and 4 months.
Wow. That's incredible.
35 million to 63 million.
Wow. What did you do to make those improvements?
Nothing. Zero. 1987 built. I just renovated 41 units, but the interest of the property location near the domain is so high, people were giving me more rents without even renovating it. So we stopped renovating. And we bought it in the COVID, September 2020, Paul, at 2.82% Freddie Mac loan.
Nice. You got the bottom, didn't you?
hit the bar right there, and it's assumable by the party who's buying it. So they love that. That's why we are able to, so there are great opportunities. Like I'm buying right now, $65 million deal. A guy who did a duplex, buying a $65 million deal with my partner, and it's $9 million equity built in it, because it's off-market deal and it was mismanaged. And within 1 year, we'll be able to bring about 7 to 9 million equity into the deal,
Wonderful.
So yeah, there are all kind of things out there. But thank you so much for spending time. I'm just thinking, what else could you share with the audience? What books are you reading, maybe? And how is your mind so abundant mind style, Yeah.
Yeah. So I'll tell you a couple of books I've been reading. One great one. I love taking the principles of stock market investing and then transferring them over to real estate investing. In fact, I'm working on a book called Warren Buffett's Rules for Real Estate Investors, and I'm having fun with that. I'm going to be giving some talks on that in the near future. But the book I'll recommend is Richer, Wiser, Happier by William Green.
Oh my gosh.
And Charlie Munger says it's possibly one of the very best investment books ever written. And it just came out recently. And so I'd recommend Richer, Wiser, Happier. I'd also recommend 2 books by Howard Marks from Oak Tree Investments. One's called Mastering the Market Cycle, Getting the Odds on Your Side. And the other one is called The Most Important Thing, where he takes 17 different axioms that he has at different times in his career called the most important thing. And he's written a chapter on each one, and it's just gold.
Oh my gosh. What great nuggets you have given, Paul. Thank you so much for hanging out with me. How can people reach you, brother? It's been such a pleasure. And please come and stay with us, right here. Yeah, it'll be such a pleasure, really.
Yeah. They can reach us. They can get my book, Storing Up Profits, on BiggerPockets, biggerpockets.com/storage, or they can go to Amazon for that. Okay. But I've got some special reports, free special reports on self-storage, mobile home parks, and other asset types on my website, which is Wellings Capital, WELLINGS, wellingscapital.com/resources will get you there.
Awesome. Thanks again, Paul, for your time. I'm really humbly, thankful to you for coming on my show. And it's such a pleasure. Again, everybody liking us and everybody that is getting so much content from my team and myself. Please give us 5-star reviews on iTunes. I read and everything, every single review. And this will bring us great guests like Paul Moore, a legend in the multifamily and other commercial fields, as you know, and just an icon in the BiggerPockets. Please follow him, read his books and his 4 recommendations. I'm going to listen back to it myself, get it on audio. I'm a sponge myself. And, thank you so much, Paul. And you have a wonderful, wonderful day, brother.
Thanks, Vinney. Take care.
Thank you so much. Bye-bye.